J.P. Morgan was a figure of immense wealth, power, and influence. He achieved the remarkable feat of owning the first billion-dollar company and wielding control over the most profitable industries in the nation. The fate of the United States economy often hung in the balance of his decisions, as a mere word or a signature from him could rescue a company from the brink of collapse or push it into bankruptcy. Hated by some, admired by others, there will never be another man quite like J.P. Morgan. John Pierpont Morgan was born in Connecticut in 1837 into privileged circumstances. John's father, Junior Spencer Morgan, was already a wealthy banker, and he ensured that John had the best education that money could buy, since he wanted John to follow in his steps as a financier. Despite being born into wealth, John's childhood was marked by adversity. He battled various health issues, including frequent coughing fits, migraines, seizures, and illnesses like scarlet fever. These conditions often confined him indoors, preventing him from playing with other children. Instead, you would find him engrossed in studying and poring over financial statements. At one point, John's health deteriorated to the extent that he fell ill with rheumatic fever. In search of a remedy, his father sent him to live in isolation on the remote Azores Islands in the middle of the Atlantic Ocean. The hope was that the climate and solitude would contribute to John's recovery. For nearly a year, he lived separated from his family. As John's health gradually improved on the islands, he resumed his education. By 1857, he had completed studies in various locations, including Boston, Switzerland, and Germany. At 19, he was ready to embark on his career journey with the knowledge and experience acquired during his educational pursuits. At this point, John's father was a junior partner at a London-based merchant banking firm called George Peabody & Company, and thanks to his father, John was able to get a job on Wall Street in the banking firm, which looked after Peabody's interest in America. Part of John's job involved writing reports to his father's firm, detailing the financial and political goings-on in America, which course at the time was still an emerging market. However, from an early age, John's father feared that his son was too rash and hot-tempered to become a successful financier and needed to learn restraint and responsibility. So, in 1861, at age 24, John left the safety and security of an established firm to strike it out on his own, founding his own company, which continued to act as an agent for his father's bank back in England. It was also that year that John married his first love, a frail young woman named Amelia Sturgis, and for a brief period, John was the happiest he'd ever been. Tragically, Amelia soon fell victim to a persistent cough, later diagnosed as tuberculosis. Right after their wedding, John embarked on an extended honeymoon with her in the Mediterranean, hoping that climate change might restore her health, much like his father had attempted for him during his illness. Regrettably, these efforts proved in vain, and John's beloved wife succumbed to the disease a mere 4 months after their wedding. At the tender age of 24, John found himself a widower, and the loss of his wife at such a young age left him inconsolable, with many believing that he never truly recovered from this profound personal tragedy. During his grief, John immersed himself even deeper in his work, using it to cope with his profound loss. While John was going through a tough time, the United States was in the midst of the Civil War. John was supposed to join the fight due to the 1863 Conscription Act, but he didn't. Instead, he paid $300 to avoid military service and had someone else take his place. However, John didn't stay out of the war entirely. He found a way to make a lot of money from it. For example, he helped buy 5,000 old Haw carbon rifles from the government for $3 each, which were considered outdated. Then, the group that bought them made some small changes and quickly sold the same rifles back to the government for $22 each. He made a huge profit from that deal, a more than 600% increase in price. But it wasn't well liked by the public or the government. However, bigger controversies were on the horizon. In 1871, John saw a great opportunity. He partnered with a top financier named Anthony to create Drexel Morgan & Company, later known as J.P. Morgan & Company. This company would be John's main focus for the rest of his life and laid the foundation for the modern banking giant, J.P. Morgan Chase. Early in his career, John mostly connected wealthy people and entrepreneurs to make deals and took a cut of the profits. But as he became incredibly wealthy and well-known, he started financing projects himself. His first big investment was in the American railroad system. Unlike other industries dominated by a single magnate like Carnegie in steel or Rockefeller in oil, one person did not control the railroads. While most people saw intense competition among railroad companies, John had a different perspective. He believed in merging these companies instead of competing. John knew larger businesses could benefit from cost advantages, so he combined several small railroads into one big company. By doing this, instead of fighting for customers and lowering prices, they could set their prices because they controlled all the nearby railroads. John invested a lot in various railroads and merged them. He took control of struggling ones, made them more efficient, and merged them into a dominant player that could beat any remaining competition. This strategy became known as Morganization. What set John apart from other investors was that he didn't just buy shares and sit back. He wanted to be in charge. He used his influential position on company boards to make decisions and shape the companies as he wished to. He craved control and actively managed the businesses he was involved in. John liked to rearrange the leaders of different railway companies to his liking and make them monopolies with him in charge. He'd only help if he got complete control. This gave John the power he wanted and made the railway industry more stable, attracting even more investments from Europe. He kept buying more railroads and aiming higher. For instance, he bought a lot of stock from William Vanderbilt and a major railway, the New York Central Railroad. The next year, he made the largest ever bond deal for railroads in the U.S., helping the Northern Pacific Railroad with $40 million in financing. John owned a third of all U.S. railroads at one point, and 60% of the stock market's value was railroad companies. So John wasn't just a wealthy financier anymore. He was actively shaping big railway companies and involved in their changes and mergers, making him even richer and more influential. His reputation as a powerful industry titan matched his imposing appearance. John had a skin condition called rosacea that made his nose red and disfigured. He also had rhinophyma, which made his nose larger with pimples. John was really sensitive about his looks and didn't like being photographed. His grandson said that whenever John got a portrait done, he'd make them change his nose to look more normal so you might not notice it in his pictures. But because of his striking looks, tall stature, and forceful speaking, John came across as quite intimidating. However, in 1901, John finally encountered someone who would challenge him, President Theodore Roosevelt. John had combined his Northern Pacific Railroad with two other railways to create a huge company called the Northern Securities Corporation. He got away with this because he was close to President William McKinley. But when McKinley was assassinated, Theodore Roosevelt became president and didn't like what John was doing. Roosevelt had the Justice Department sue the company for breaking the Sherman Antitrust Act of 1890. John fought this in court, but eventually, the company was forced to break up. This was just the start of a tense relationship between the two men. When John heard that Roosevelt was going to Africa for a year, he said something mean about hoping a lion would meet him. But for John, this was just a small setback. He was already planning something even more ambitious. In 1901, Carnegie Steel was the top dog in the steel industry, making around $40 million a year. Andrew Carnegie wanted to retire and sell his company. John stepped in and told him to name his price, and Carnegie said $480 million. John agreed right away and would have paid even more. John's historic purchase led to the merger of Carnegie Steel, the Federal Steel Company, and a few others, creating U.S. Steel, the world's first $1 million corporation with a market cap of $1.4 million. To give you an idea, all of the manufacturing in the country was worth a total of $9 million. This deal gave John control of about 2/3 of American steel production. John had conquered two of the biggest industries at the time, steel and railroads, but he didn't stop there. He helped finance Thomas Edison's early electricity experiments and played a vital role in merging Edison Electric with its rivals to create General Electric. He also had a hand in starting what would later become AT&T. John had a unique talent for combining companies and turning them into powerful giants. However, there was trouble ahead. In 1893, the United States faced a depression like never before. After decades of unchecked growth and investments, the economy crashed. Stocks lost almost half their value, causing chaos. In 1893, a big crisis hit the United States. 1,000 businesses shut down forever, 100 banks went bankrupt, and many lost their jobs. This crisis scared off foreign investors, and they traded their American bonds for gold, which caused the country to lose its gold reserves. At that time, the U.S. tied its dollar's value to gold. People could exchange their paper money for physical gold, making them feel more confident about their worth. The government always kept at least $100 million worth of gold to back the dollar. But by 1895, most of that gold was gone, and the value of the dollar dropped a lot. At the worst point, the government only had about $9 million worth of gold left, which meant they might be unable to repay their loans any time. This situation caused even more panic, with more investors taking their money out of the U.S., which made the gold reserves go down even more. The U.S. needed a central bank to help them, and things could have been better. President Cleveland knew this was a critical moment that could change the country's fate. The usual plan of selling more bonds to Americans needed to work faster. John saw this as the right moment for action. He went to Washington to meet the president and shared his plan to rescue the U.S. from this economic disaster. John's bold plan was to gather a group of top bankers and work with foreign investors to boost the U.S. gold reserves. They suggested buying $60 million worth of 30-year gold bonds using 3.5 million ounces of gold. President Cleveland could approve this without Congress, thanks to an old law from the Civil War. Once Cleveland agreed, John's team in New York acted fast and bought all the gold bonds in just 22 minutes. John's quick actions calmed the shaky financial market and restored economic confidence. John almost single-handedly rescued the country from complete collapse. But being a clever businessman, he also made a lot of money by getting good rates on the gold bonds he bought. However, some wondered whether John's actions were driven by patriotism or a chance to make money. During the next election, the relationship between big banks and the government was a big issue for the Democrats. Surprisingly, John and his banker friends supported the Republican nominee, who won the election. So John kept his close ties to the government, at least for now. This wasn't the only time John played a crucial role in stabilizing the American economy. In 1907, another financial crisis hit, and many banks were on the brink of going broke. People lined up to take their money out of the banks, and the government even had to tell bank tellers to count money slowly to prevent a disaster if everyone withdrew their money at once. By this time, Roosevelt was the president, and he and John didn't usually agree. But the 1907 crisis was so bad that they both agreed it was best for the government and big business to work together to prevent a depression. When a financial crisis hit in 1907, President Roosevelt asked J.P. Morgan for help. John planned to spend money where it was needed most. He gathered top financiers and bank leaders in a private library on Madison Avenue to decide what to do. His plan was for them to invest in smaller banks to save them. John and his group put a lot of money into several banks to pay their debts and avoid going bankrupt. John locked them in until they all agreed on a solution. Everyone agreed with John's plan by morning, and the U.S. Treasury also added $25 million. This showed how much President Roosevelt respected John's business sense. Even though John was 70 years old and had a bad cold, he negotiated all this while constantly coughing and sneezing. But his plan worked. They injected much money into the economy, restored public confidence in the banking system, and avoided another economic disaster. However, people soon realized they had become too dependent on one man, John. Things needed to change. John was called to testify before the Pujo Committee, which wanted to investigate the power of Wall Street and its role in the economy. He became the face of Wall Street's power during these hearings. Despite his financial success, John's mental health was declining. He had nervous breakdowns and struggled with how the media portrayed him. Interestingly, he was supposed to be on the Titanic's maiden voyage, but canceled at the last moment due to health issues. The Pujo Committee eventually led to the creation of the Federal Reserve because it was clear that the economy couldn't rely on just a few ultra-rich and influential individuals to step in when needed. John died on March 31, 1913, on vacation in Rome at 75. His son took over the business and continued its success. Even today, some worry that the bank he founded is too powerful. The bank has gone through many changes, including mergers with other banks like Bank One and Best Earns. The biggest union was with Chase Bank in 2000, creating JP Morgan Chase. With about $3 billion in assets, it's now the world's largest bank by market value. We've reached the end of the story of one of history's most influential individuals. Thank you for watching, and see you later.